Ladies and gentlemen, welcome to Triple N Media. I am NIK NIKAM. In this presentation, we are going to look at the April 2021 CPI, the Consumer Price Index, which is going to be announced on Tuesday, April 13, 2021, and see what effect it's going to have on the stock market. Let's look at some historical aspects of the Consumer Price Index. Can Consumer Price Index, CPI, a key inflation data, jolt a overheated, overstressed stock market? Well, I guess you just have to wait until 8:30 a.m. on Tuesday, April 13, 2021. Let's look at some historical data as far as Consumer Price Index is concerned. As you can see, in the 80s, when the interest rates were like 12 to 18%, the CPI was as high as 13.8%, something like that. And in the last 2 decades, the CPI has been hovering between 1 and 3%. It took a significant dive during the March 2020 stock market crash, and it is slowly creeping up in the last couple of quarters. So we're going to take a deeper look into that and see what effect it's going to have on the overall economy and the stock market. And here is a closer look at the Consumer Price Index. It reached the bottom during April 2020, right after the corona crash. And since then, it has been slowly but steadily creeping up. And as you can see, in the January month, the price went up by 1.3%. And the question is the Consumer Price Index going to be up? That's no brainer. We'll find out. To just give you a little perspective as what the Fed chairman thinks and what the economic experts in the market think, let's look at Fed chairman's statement. He expects the inflation to be around 2.4% max for this year, and it would taper down during the latter part of the year 2021. But the economists have a totally different perspective as far as the inflation is concerned. For example, Jerome Siegel, the eternal bull optimistic predictor, thinks the inflation is going to be close to 4% and not 2.4%. So the real range is going to be somewhere between 2.4% and 4%. So it's better to be prepared for the worst so that it doesn't come as a surprise, especially if it relates to your stocks and investments. Surprisingly, last Friday, we got a preview of what the CPI might be tomorrow, because the March PPI, the Producer Price Index, showed a 1% jump compared to September quarter. That was a significant jump in the Producer Price Index. When the Producer Price Index goes up, you can guess what the Consumer Price Index is going to be. If it costs more to produce goods, it's going to cost more for you to buy. It's just mathematics. What do you think is going to make the CPI go up? I mean, just look around. I mean, just look at your checking account and see the money you're spending. The gas prices are up. The service costs are up. Restaurant food prices are through the roof. Transportation costs are up. Labor costs are going up. Material costs are going up. In fact, the lumber future went up by like 49% about 3 to 4 weeks ago. And when all these things are going up, what do you think is going to cost you to get something in the market? And what do you think you're going to get for every dollar you spend? That's what the inflation reflects. All right. And here is a chart from 2016 to 2021 showing the core CPI excluding food and energy. It has been hovering around 2%. More or less, it was down during the market crash and following that. But as I showed you in the previous charts, it's been slowly creeping up. See, the question is, we know the consumer price index is going to be higher than in the January quarter. We know it is going to be up, but the question is by what percentage point? And that's the key thing, because that's going to tell us how fast the inflation is going up, and that will reflect how much our dollar is worth in terms of buying power, and more importantly, what it's going to do to the stock market, namely your retirement funds and your investments. So the fundamental question we want to ask ourselves is, the economy is picking up. The labor costs are going up. The transportation costs are going up. The producer price index has gone up. We know the consumer price index is going to be up. And do we know how much it's going to go up? And more importantly, how do we protect our assets, our retirement funds, against this increase in producer price index, increase in consumer price index, increase in inflation? And that is the fundamental question we need to ask. We need to pay attention to all these data, because it's going to have an effect on our investments and our retirement funds. Thank you so much for watching. This has been a presentation of Triple N Media, and please do subscribe to our channel, and we'll bring you more and more useful information so you can become an educated investor. Thank you.